Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Alcana, along with Brianna Valesky, and we have Serge Berger on the line. He's head trader and investment strategist at the Steady Trader. Serge, how you doing this morning?
I'm doing well. How are you?
We're doing pretty good here. I guess on this morning here, I guess we could call it another edition of Black Monday here. I mean, you had the week close on Friday, the big selling balances. I mean, who could have imagined the spoos would be down over 100 handles today?
It's quite amazing. But I think, and obviously, hindsight's 2020. But if you look at the duration of the range we've had, and I'm just going to go to the S&P here, and we've talked about this, pretty much all year almost, you and I, and at the end of the day, when a range like this resolves, it doesn't resolve slowly. It just falls apart. And so from that perspective, yes, am I surprised we're seeing, a 3-day follow through like this? Yes. But, technically that's just basically what we're calling for. Everyone was calling for a move, and now we're getting one. Now people are complaining.
Yeah. Okay. So, what are your strategies? I mean, are you going to try and be a hero today on the open and do some day trading, or are you going to look over your portfolio, see what maybe you should get rid of, what you want to add to? How are you going to approach the market today?
So I think we have to have a game plan coming in, and I started my game plan on Saturday because something just didn't sit right over the weekend when I saw the way we closed on Friday. So basically, two things. Number one. This to me, every time we see a move of 10 to 15%, that is an average correction sort of level. So when I see that, I do have to make some adjustments, or i.e. add to the long-term buckets, like my retirement stuff and things like that. And what I do is I'll go in, I'll buy some quality stocks that I think will be okay. Maybe some of those large, massive oil refiners and companies like ExxonMobil and stuff like that. But also, what I'm going to do is I'm going to start selling some out of the money puts and out of money put spreads, like deep out of the money. We can get a lot of premium for that right now with the VIX looking like it's going to open in the high 20s this morning. So that's number one. And number two, obviously I'm going to be a little bit tactical. I'm going to try to play some bounces if we see we get something. I'm going to, that unfortunately, in my opinion, you can only just try a few times. I'm going to maybe play with some spies. I'm going to try not to use options because I don't want to buy this implied volatility.
Serge, could you go into that a little bit more? Because that was like my next question for you. It's so like a impatient trader like me. I'm gonna want to run out and buy like some weekly calls on something. For a bounce. Why is that not a good move with the implied volatility? Could you explain implied volatility and maybe some potential ways to work a way around it?
Yeah, sure. I mean, and by the way, I'd love to sort of hear your thought of how you play this as well afterwards. But basically, what I'm looking to do is, implied volatility is so high right now. It's been screaming from the low teens into the high 20s on the VIX in what, 4 or 5 trading days. Basically, when implied volatility is high, the options are basically expensive, right? Or more expensive. And so basically, I don't want to buy calls here. What I'd rather do is I'd rather sell options, so I take in the premium and basically take advantage of this high implied volatility. So what I'm going to look to do is basically sell puts, which is an inverse proxy to buying the S&P of 100, so to speak, but not having to pay up for the implied volatility, but actually getting paid by the implied volatility. So if you're not going to buy weekly puts or calls, what are you going to go cash on this, or what are you?
Well, what are you talking? You talk about my trader hat, or are you talking about my trader hat? I'm going to wait for a bounce here. I can't short the spoos down 100. I would like to take a nibble off the open here, see where that pre-market low is on the weekly charts. I mean, if I get kicked aside the curb on that, then I'll take another shot at 1850. If it takes out 1850, then I only get one more strike and I might be done for the day. But yeah, I mean, for me, the S&Ps are down 5%. I'm looking at some of these stocks. Apple's down 6.5%. Microsoft is down 5.75%. Exxon's down. They're all catching up with it, but to me, I have to fade this move and somewhat using the pre-market lows and, obviously, cutting bait and retrying. Also, another way, too, is to watch the open here. And if the stocks go straight down off the open and then they come back up through the opening price, sometimes that will give me a trigger and then use the low. So there's a couple different strategies. Longer.
But you're not going to play the options. You're not going to
No,
buy calls.
You know what, Serge? I tell you I won't, and I know I will. I know.
But is it on the weeklies? Is it? I mean, I assume the effect is equally disastrous, right? I mean, you're going to have massive pumped up IV on the weekly, right?
Exactly. Yeah. Maybe what I'll try and do is maybe if I really feel like I need to play the weeklies, maybe wait till the try at the end of the day or something like that, because the premium is just going to erode. But as far as the longer term perspective and things like that, I actually will admit I did put a little money to work on Friday, and I'm going to need to put a little bit more to work today, and continuing to do so. But different perspectives for different time frames.
Sure, absolutely agree.
Anything? I mean, Apple. You had that tremendous short on it. You got a lot on it. Took it off. It's always hard to look back on trades. Now what about? Now is it getting tempting to you on the long side at all? And actually, I was noticing Apple here, and it did, while the SPOOs were going down, it did peak its nose over 100, but now it's back down. I was looking at 95.5 to 96.5 in Apple. You think we're going to get down that low today?
Yeah, that little bump you saw was apparently an email from Cook to Jim Cramer that CNBC just flaunted about 20 minutes ago or something like that. That might have been that. Lasted a few minutes, but yeah. Listen, I think Apple's sub $100 psychologically, and from an oversold perspective, yeah, absolutely. Again, what I'd like to do here is sell some out of the money puts or put spreads.
Okay.
Because IV is going to be pumped up. So why rush out and try to buy the stock if at this juncture, right? I mean, if I can just sell some puts and basically get paid,
yep,
for waiting. Why not? Because I have no problem buying a stock $100. This is simple options strategies 101 that unfortunately isn't being taught anymore. Everyone wants to just chase them higher or lower all the time, but this is good stuff,
Well, we have all three major indexes halted here, Serge.
Beautiful.
Yeah. Yep.
But it's just and it is so unbelievable. And I think we talked about this one time on the show not too long ago, and I said that, listen, one day, and I always said at some point this year we're gonna have a 15-20% move in the S&Ps. But I said one day what's gonna happen, because the dip buying mentality of the people who have only been involved in the market, like guys that run little chat rooms and stuff like that, are all over the internet and YouTube. Those guys have never actually had a bad market. All they've had is, since they started trading in 2009 or 10, is buy the dip. They don't know anything else. They don't even. And so when that happens, the bottom just caves.
That's a great point. That's we were talking about that. I mean, and we kind of said it, tongue in cheek, but this is really the first time that you did get it. Also, you have the effect of people, wow, looking at their statements over the weekend. Wow, my 401k, holy mackerel! They call their broker. They're like, get me out Monday morning. I'm sure there's more than a few mutual fund redemptions going on this morning, and things like that. But now we're to limit down situation, so we'll see. I think what we're going to do, I might have to pull out the particulars on this. I think we're going to have a halt, and then at some point they're going to have to reopen this puppy. Now, if it halts again and goes limit down, I'm not sure what the second limits are. Brent, do you have anything on the circuit breakers, or do you have anything that pulled up, or Brianna?
Nothing pulled up right now, but let me go hunt something down real quick, Joel.
Yeah, go to the CME site,
okay,
and go to limit circuit breakers and see. Serge, gold. I mean, I don't know if you read your Barron's over the weekend, but Andrew Barry, wrote an article how, a little midsummer slump, gold's not really rallying, and I'm thinking, well, maybe he was not so correct about the market, but the gold market here has had a nice move. Is that catching your interest at all? We're now almost $100 off the lows.
No, it is. It really absolutely is. I think gold has acted a lot better. I think there's two things here. There's a cyclical aspect to this, and then there's the simple stuff that when equities fall apart, there is a tendency, right? Tendency for gold to get a bid, and I think gold has done that. That's been my bull case since I think early June or so on gold. Obviously, it had slumped since, but I think that has exactly played out now. So I still like to play the gold miners as a proxy to gold, as a trade, right? Not as a longer term buy, but as a trade. And actually, gold right now, it looks like it's recovered. I know it was down earlier today. Now we're up 40 basis points. One thing I want to quickly talk about before about a stock, it's Chevron. Chevron is, you look at that chart, it's like death spiral city. The thing's got a 6% dividend yield. If anyone wants to make a longer term play in this, I'm gonna do this. I'm gonna sell out the money puts on this in a minute here. Or whenever the market opens.
Whenever it opens here. We are at a historic moment here in the markets.
We're making history here this morning.
The Brentster's popping in here, 13% and 20% price limits are applied to the futures pricing and are effective at 8:30. So did we hit? I'm looking at the futures, and I see them down 6.15. So I'm not sure what they're predicating that 7% on here. But we got another.
Which future are you looking at? I see that the S&Ps are down 5, or I was halted at -5.
Yeah, -5. I don't know. I'm just looking from what we have here. Okay, we're open for business here, Serge, and we just had another dip down into the 1950 handle.
Wow!
Holy mackerel! They reopened it. Boy, if you had some orders out there off the open, we had the immediate open at 1964.50, opened at 1851.75, not quite at my 1850 level. Serge, we'll let you go. We're going to cover the markets here. Thanks a lot for your input.
Thanks, guys. Good luck out there.